We now shift focus to the continent at large. An IMF staff team has concluded its visit to Senegal. This is a visit to start assessing the implications of the data revisions resulting from the General Inspectorate of Finance report for past and current IMF-supported programs. The IMF has welcomed the IGF report, and joining us to unpack these findings and some of the fiscal challenges that Senegal faces is Absa CIB's Sub-Saharan Africa Macroeconomist, Ridle Markus. Thank you so much for your time, Ridle. What actually did bring the IMF to Senegal this month?
Well, I think in September, the government of Senegal discovered, obviously, that there might be a need to audit the previous fiscal and debt data. And that's exactly what they did. They got the government auditors to look at the data, and then towards the end of September, they confirmed that it does look like historic data, especially in the period 2019 to 2023, seemed to be a lot worse than initially anticipated. For example, on the fiscal deficit side, I think the expectation was that the previous numbers showed that the deficit was around 5.5% of GDP. And the audited data showed that it is most likely averaging above 10%. And the same with debt. It seems like debt is actually about 10 percentage points of GDP higher than previously thought. And it's, of course, interesting timing because the country is heading into elections. But also, Senegal is facing a number of challenges. As they say, when it rains, it storms. There's a lot of flooding taking place in Senegal and I suppose in the broader West Africa region at the moment, but that is just putting the economy under further pressure. We did see the IMF downgrading Senegal's growth rate for the year 2024 in September, when they said it's unlikely that Senegal's economy will grow by above 7% as previously expected, and most likely coming at around 6%. So the country has been having a tough time meeting existing budgetary targets. And now this news, of course, is making a lot of investors a little bit nervous, and certainly rating agencies as well.
Well, making ratings agencies nervous, but what about the IMF? Because the IMF has welcomed the findings of this report. Just talk to me about that reaction, but also now what it means for the relationship between the IMF and Senegal and the IMF support for Senegal.
So the IMF, of course, as I mentioned earlier, had a mission into Senegal early September, and they were forced to send a second team to Senegal that concluded, I think it was nearly a week-long series of meetings on the 16th of October. And of course, the IMF is very vague in the statement, but they did confirm, of course, that they are looking and will be working with the Senegalese authorities on determining the impact on the program, but also, all this data is really preliminary, and they're awaiting the auditing team's final confirmation and the Ministry of Finance's confirmation on this data. How it will impact on the program going forward, it is really unclear. I think the IMF will probably, most likely stay committed to Senegal and continue to support this country as they've done over many years. They've got very strong relations with the government. So I don't think that necessarily we'll see a change in, that they won't suspend the program or anything. However, it is very likely that the IMF, as they said in their statement last week, that they will ask for a greater focus on revenue mobilization and also expenditure controls and improve governance, etc., which is very typical. And I think that also speaks to the fact that Senegal's current fiscal trajectory is very worrying. As I've mentioned earlier, it now looks like they're most likely coming in with a deficit north of 7.5% instead of the initial deficit that was targeted for, I think, 4.8% of GDP. So Senegal needs to continue with reforms. And I think that the IMF will continue to push that narrative.
I mean, though, Ridle, you talk about Moody's downgrading the Senegal's credit rating. How bad do things look there, and could things maybe get worse before they get better?
Yeah, so just on the downgrade, so Moody's downgraded Senegal to be, I think, B1 a week ago. And over the weekend, on Friday specifically, the 18th of October, S&P also revised Senegal's outlook from stable to negative, mentioning the fact, of course, that there's new data and debt, data that we got looks a lot worse, and it's obviously a credibility issue as well. So rating agencies, I think, are generally concerned about what is happening and also the sustainability of the current fiscal trajectory. And there's going to be a big focus on how Senegal is going to turn this around. We know that they probably need to, in the face of weaker revenues, they probably need to also get rid of all the subsidies, etc. But it's difficult. I mean, Senegal is facing an election on the 17th of November, as I mentioned earlier, and elections are notoriously expensive. But of course, as soon as possible after the elections, I think the expectation will be that Senegal return to fiscal consolidation path to ensure longer-term fiscal and debt sustainability.
All right. Well, thank you so much for your time and for your insights there, Ridle. Appreciate it. That was Ridle Markus, SSA Macroeconomist from Absa CIB.